Good morning, Jim Barrett from RJO Futures in Chicago on Friday, June 8th. Okay, well, we're going to play ping pong for a while in the Treasury note market. It looks like started out the week warning that profit taking would likely get the upper hand on a long-term basis. Yields had moved up, or rather down so quickly, prices up so quickly, had become unattractive after last Friday's unemployment number. So we started a little bit baby correction here. Told you not to expect too much on Sunday night, Monday. We went down hard not hard, but we eased down for 3 days in a row. Now yesterday, not last night, but the night before, of course, the Chinese lowered short-term rates unexpectedly. The stock market opened kind of hot, crude opened kind of hot. However, the notes held the day before as low, around the 133.06 area, around a yield, 10-year yield of 1.67 that I mentioned also as the first support in the market. Now, remember, we had pierced 150 Friday briefly, so the pullback down to 167 was enough to hold things in. Obviously, opinion shifted on this Chinese rate cut. Why would they be cutting rates? Well, all of a sudden, markets worried about weak economic numbers coming out in China over the weekend. And so the tone changed. Stocks lost their early highs. The crude got demolished. Gold and silver got demolished yesterday. And the notes held in, but didn't really move too much. They moved overnight. We got a bounce up, a very good bounce up. And as I mentioned, we're sort of going to be in a ping pong market, it looks like, with support 133.06, which is around that 167 yield. Resistance about a point higher, say 134.08 initially, which is the 156 yield. Resistance all the way up, as if we should fall underneath the 1.56. In other words, it's not going to be easy. We're not going to trend higher due to long-term unattractive yields. However, there really is no reason for these things to sell off hard, and again, the sell-off was contained where it was earlier in the week, and I expect today, obviously, we'll stay inside those ranges. We'll see what the economic numbers bring over the weekend in China, but I do think we're going to do some range trading for a while. Other things coming up that may move the market: Greek elections are coming up. There'll be a Fed meeting coming up that may be a bit contentious in that, a lot of people feel there's diminishing returns on all this QE stuff. So it'd be maybe hard for these guys to come to a consensus. Another reason for notes to stay in the range that it's recently carved out. It can be reached at 800-500-2461. Please give me a call anytime. Remember, there's a risk of loss in futures trading, not for everybody. Have a great summer weekend. Thank you.